Hello, everyone. Welcome to the Main Street Money podcast. I'm Andrew Gay, along with Zachary Green and Gilbert Pies, and we are the Texas Hill Country Advisors, independent financial advisors based here in Kerrville, Texas. A couple of house cleaning items before we get started. Number one, first and foremost, is we have changed the name of our podcast from the For Investors podcast to the Main Street Money podcast. We think it's a little more relevant about what we talk about on here because one of our main goals is to take the big ideas on Wall Street and bring them to Main Street and make them a little more local and relevant. So with that, let's jump right into today's episode. And before we go around and talk about our New Year's resolutions, Zach, you want to give us a quick update on markets and how we fared to close out 2025 and how we're kicking off 2026?
We had our Santa Claus rally before Christmas, so the days leading up, it did come up a bit, not as much as historically, but we'll take it. And then the week after was a little flat to down. We saw some people taking gains and pulling back a little bit. Now futures are a little confused.
So we had a very strong positive year in the equity markets, and that makes 3 years in a row, right?
Yes.
We've talked about that a little bit.
And we also had a pretty decent return in the fixed income markets. You know, that's one that I don't think we and anybody else really talks that much about, but fixed income markets did very well this year.
It's not as eye-catching as
that's
the
for
stock
sure.
market.
And it's certainly not as sexy. And the returns in the fixed income market were not in the double digits, but they were still impressive nonetheless, because with the Fed cutting interest rates, that makes fixed income that's already been out there more valuable as they cut interest rates. And if you believe what some people in the market believe, that the Feds are going to continue on a rate cutting cycle, well, fixed income should be a good place to be also for 26.
Yeah, you want to mention that you mentioned the inverse relationship between the face value of bonds and the interest rates or the yield on the bonds. So
yes, generally speaking, when interest rates go down, bond values or bond prices go up. And so whenever you have that other dynamic going on where interest rates are going up, well, bond values and bond prices go down. But since we've had this past last 6 months of the year, the Fed cutting interest rates, that has made, generally speaking, all bonds move up in value and price a little bit. Now, not all bonds are created equal. Not all bonds went up at the same time and the same percentage. But generally speaking, the bond market in general did very well this year.
All right. And with that, we're going to jump into maybe some of our New Year's resolutions.
I'd say just off the top of my head, a really good one is get started. And in this setting, I'm talking about investing. You could take this generally too, but investing is one of those things that's scary. There's a lot of confusion around it. So just start peeling the layers back and talk to someone you trust and start learning about it, because it does pay off in the long run. And that applies to a lot of things. So
I don't usually make resolutions because I'm not very good at keeping them. But I will say this. I do think that the beginning of the year is a good time for all of us to reevaluate not only ourselves, but our relationships that we have, and really start to focus in on the ones that mean the most to you. So whether it's your relationships, focus on the ones that really, really mean a lot to you, your husband, your wife, your kids, your neighbor, your friends, I don't know, whichever ones are good for you, do those. And then, of course, as I say, I think the beginning of the year is a good time to reevaluate yourself. What is important to you? Is taking better care of your health important? Then start doing it. If investing is something that you need to start doing it. And I think really what Zach's idea is that, in my mind, it's about long-term and consistency. If you need to start losing weight, well, you got to think about the long term. You're not going to lose weight immediately. It's going to take a long-term outlook to get where you want to be. Same thing with eating right. It's really hard to go cold turkey and stop eating bags of chips. But if you commit to maybe just a little less than you did the day before, over time you should do better. The other one is when we talk about investing, of course, is, as you said, Zach, there's no better time to do it than now. And as long as you have that long-term focus, it'll all work out. So for me, it's reevaluating my relationships and reevaluating myself, and then trying to focus in on the things that are important to me this year. That's what I'm looking for.
Those are good. I think my number one resolution, if I had to pick one, because I also feel like my mind goes crazy every time that subject gets brought up every year. It's like I have a list of all these things that I want to do, right? And kind of to your point, one of the things that I've learned over time is that it's really tough to do all of those at once. It's a lot easier to just start with one thing. And when I was first trying to change my diet, the first thing I did was cut out sodas. I didn't focus on anything else. I didn't focus on changing anything else. I just cut out sodas. And by that, I mean, I was cutting out sugar. So I still had diet sodas, but I cut out all sugary drinks. And then that gave me momentum to kind of go on to the next thing. And I've done some of the eating right stuff. I work out a lot. And so I don't really have anything in the health buckets this year, but the number one thing I wanted to do this year is write down some personal goals. We talked a little bit about business goals. I think a lot of changes in focus about what we're going to undertake this year is focused on our business and what we have going on here. But for myself, me and my wife, I want to make sure that we actually write down some actual personal goals of things that we want to achieve this year. And I think that's a good starting point for us. So with that, let's jump off into maybe some ideas that we could talk about for people that want to consider their financial health as maybe part of their resolutions this year. So one of you gentlemen want to start with maybe some ideas about what's the first thing that comes to mind for you guys? Because I know what comes to mind for me when I talk about financial health. You're going to make a resolution. You already mentioned starting now. That's one of the first things I think about. But do you have anything that comes to mind?
Yeah, one of the things that we've talked about for years when we start talking to people is a net worth statement. I would suggest that if you're a listener, even if you're not an investor, but you're just listening and you're saying, hey, how can I make sure that my financial health is where I want it to be? And how do I know I'm doing better? Create a net worth statement. I think that's the first thing you should do. And of course, for those that don't know, what you do is create a list of all your assets, everything that you own, house, car, properties, rentals, personal property, your bank accounts, life insurance, any asset that you have, your Pokemon card collection.
Which actually, if you've had it for a while, it might be worth something.
Yeah. Hey, listen, no judgments, man. If that's your asset, that's your asset, right? Well, whatever it is your assets. Make a list of all those things, where they're at, what the address is, what balance is, what the value is that you think is today. Just make a list of all those things that you have as assets, and then make another list of all your debts or liabilities, stuff that you owe, and who you owe it to, and how much you still owe. Create a list and add numbers to it. So put the account number, the loan number, the value that is still outstanding, and then total those things up. And if you can have a list of your assets and your liabilities, you subtract those two numbers, you come up with a net worth statement. And hopefully your net worth is positive. In other words, you own more than you owe to somebody else.
But it's also okay if it's negative, because when I started, it was negative substantially.
All of us usually start with a negative net worth, but it's up to us to increase that. And how do you increase your net worth? How do you make your net worth positive? You either own more stuff and owe less, or if you don't own more stuff, you can owe less. In other words, pay off some of those debts that you own or that you have, and it will make your net worth increase. And so I would suggest for everybody, a New Year's resolution to make when it comes to your finances is creating a net worth statement. This way, next year in 2027, you can start again and update your sheet and compare it to 2026 and say, okay, am I making progress here? Is my net worth going up, or is it going down, or is it staying flat? That's a really good starting point to figure out how you're doing financially.
Yeah, and I think that the main thing to point out there is it's about the movement of that number over time. That should be a living, breathing thing thing that you do is not just, it's a snapshot in time, but you should track it over time so that it moves. And the main thing is to make sure that number goes up over time. It can fluctuate. You can start at a really big negative number like I did, 10, 12 years ago. But you hope that from one year to the next, or from one point to the next, when you're calculating that it actually moves in a positive direction. And that's how you know you are moving in the right direction financially.
Guess who's working on their net worth statement right now? Me. I'm working on it because what I've been doing for the past 10 years is doing that at the beginning of the year. I go back and look at all the assets that I have, assuming I still have them, update the values, update the changes that have been made, whether positive or negative, it doesn't matter. Update those things and add stuff that I've acquired or a big asset, or removing assets that are no longer there. Maybe I've consolidated some things. Maybe I've taken withdrawals. I don't know, whatever the case might be. And then I also update my liability side of things. If I have any liabilities, thankfully I'm in the position where I don't have that many. So it's very easy to do that part of it. And then I can focus on that net worth number and compare it to the previous year and see if it's done well. And I'm hopeful that it's better than what it was the year before. So we'll see.
Yeah. And if you guys out there listening, and I think you've seen this before. I know you have, but we have a template. I have a template of how to calculate your net worth. So if it seems a little overwhelming, I totally understand that, because you're like, oh, how do I make sure that I list everything and I don't leave anything out? And maybe sometimes finding the values for things is tough, but I have a template of basically a list that has all kinds of stuff listed. Some you'll have, some you won't, but that can give you a little bit of a push to get started if you think that it's a little bit intimidating to try to start calculating your net worth. So you're welcome to come by and get those. We'd not charge you for that ever. So you're welcome to hit us up for that if you want to come by and get one and you're interested in calculating net worth. So for me, the one thing that I always think about is budgeting when it comes to New Year's resolutions. And to tie this back into what you were just talking about, Gilbert, I think the way that, because the follow-up question from after calculating your net worth is, okay, how do I move my net worth in the right direction? You address that. But the secret to that is budgeting, because you have to make sure that you're living within your means and you're not spending more money than you're making. And then the next question is, okay, I'm not spending more money than I'm making. So what do I do with that other money? And that's where budgeting comes in, to make sure that excess money that you have is flowing onto that personal balance sheet and indeed lowering your liabilities and increasing your assets. So usually that's the number one thing I think about when I think about New Year's resolutions and financial health is budgeting. But some other things I wanted to throw out there, and you guys can add to this if you want. But when we think about, new year, new me, working on my financial health from an investing standpoint, asset allocation, we talk about that on here a lot. A lot of times that's worth a review, especially now because we've had 3 back-to-back really strong stock market performance in the last 3 years. So, I think we've all kind of been holding our breath and waiting for a little bit of a correction. The last big down market we saw in the stock market was 2022 when the Fed started raising interest rates. So, it's not a matter of if that's going to happen. It's a matter of when that's going to happen. And we just don't know how far off that is. But I think some of us are kind of holding our breath looking for that. So I think reviewing your asset allocation could be key right now if you haven't done so in a while. Contributing to retirement accounts. We've already had a few people. It's January 2, and we've already had some people contribute to their IRAs for this year. So yeah. And so, of course, the limits that you're allowed to contribute change each year. For the most part, they're indexed for inflation. So those typically go up. But looking at that, making sure that if you haven't filed your taxes for 2025 tax year, you actually still have some time to make contributions to IRAs for the previous year. So that might be worth a look too. Or rebalancing your portfolio, because typically if you're in some kind of investment advisory account, you have a money manager in your account, depending on what type of brokerage or investment account you have, there may be some kind of automatic rebalancing mechanism inside your account already. But it's good to know that, whether you do or don't have that. And maybe that's something you should consider based on your personal goals and investing objectives and whatnot. So,
and if you're not sure what rebalancing is and how it's important to you, let us know. We'll tell you, because rebalancing is so important when you have had a strong market performance, because what ends up happening is the portfolio you originally set up at 80-20, if you haven't done anything to it over the past few years, it's now more like 90-10. And if you're okay with 90-10, great. But if you're not okay with 90-10, you need to rebalance your portfolio. And it's real simple. You're basically shaving off some of the profits that you've made and reallocating to something like bonds that maybe hasn't done as well or isn't as exciting or inviting, but it helps to minimize the risk that you're actually taking over time.
And finally, I'll leave you all with a little bit of wisdom from our friends at Capital Group / American Funds. They have this piece that I really like. I repeat it often, but it's the top 3 most common mistakes that they think investors make. Those are number one, focusing too much on the short term. If you look at a chart and you plotted the same chart, whether it was some kind of investment chart, like we usually typically are talking about the stock market. But if you plot it on a month-to-month basis versus the same exact data plotted on a year-to-year basis, and you look at that over the long term, the year-to-year chart is a lot smoother ride. So focusing too much on the short term can stir up emotions in us and sometimes cause us to make decisions that might not be good for our long-term investing goals. Number 2 is assuming that today's negative headlines make it a bad time to invest. Zach, you mentioned earlier, today's the best day to start investing just because of the factor of time. It's a very strong piece of the long-term investing equation. So, I've seen charts that if you look at a 100-year chart of like the S&P 500, right? Obviously, anywhere you put your finger on the right side versus putting your finger on the left side somewhere, as long as it's spread out enough, the right side is typically higher. And you could do things like plot the presidents across the top and show all the different terms for the different presidents over that 100-year period. And it just goes to show that markets typically, even after bad years, typically recover and go on to hit new highs. And so assuming today's negative headlines make it a bad time to invest sometimes is a mistake that common investors make. And finally, my favorite point of all, which is trying to time the market. So the stat that we mentioned last time on our last podcast was, if you look at over the last 20 or 25 years, if you miss the best 10 individual days, then your returns basically get slashed almost in half. And so when you're trying to time the market, or you think that, today's headlines make it a bad time to invest, or they make it a time that I should get in and out of the market, you might miss some of those days. And you only got, like the 10 best days. That's a very small number for a 20 or 25-year period. In trying to time the market, we just know that is, number one, it's not possible. Even the most smartest CFAs on Wall Street, they can't do it. It's impossible. It's next to impossible. And if you try to do that as an everyday investor, a lot of times it doesn't work out so well. So those are the top 3 most common mistakes that investors make, according to Capital Group. So I'll leave you guys with that, unless you got anything else you want to add on.
Because it is January the 2nd.
Oh, yes.
Why don't we write down our predictions for the end of the year for the S&P 500? Where's the S&P right now?
68. So the market just closed. It's 68, 58, 47.
Okay. What do you think the market's going to be, the S&P anyway, at the end of the year? If you had to throw out a number.
I'd say, I'm going to go a little bit bearish. I'm going to say 6,500.
6,500. Okay. Zachary?
I'll go with 7,000.
7,000. Okay.
Both of us, that's kind of sideways.
Yeah, it is pretty sideways. I'm going to go with 7,800.
The bullish of the 3.
Yes. What about the NASDAQ?
So NASDAQ's currently at 23,235.63. I'll go 20,000.
20,000 on the NASDAQ.
I'll be bearish on that one too, just because it's tech heavy, and if we have a correction year, I think that that's totally possible. We might take a breather there.
All right. No judgments, man. No judgments. What about you, Zach?
I'll go 2,700 or 27,000.
27,000. Okay. So you're kind of bullish on that one. Okay.
Yeah.
Well, what'd you say? It's 22 right now?
I said 23.
23. Okay. I'm gonna go ahead and be a bull and say 30,000.
Now for the Dow, I'm gonna be a little bullish because I think the rotation trade might help. I think if that materializes.
Well, actually, on my sheet, I only put down the S&P and Nasdaq and the 10-year Treasury.
Oh, okay.
Yeah.
Oh man,
cool. Yeah.
I can't get my bullish.
No, sorry, not on this
wager
list,
in
anyway.
there. Okay,
So what's the 10-year at? It closed at
4.18.
I was going to say 4.2, something like that.
4.18. So
where do you think the 10-year is going to be?
3.75.
3.75. Okay. How about you, Zach?
I'm gonna say 4.25.
4.25. Okay.
Yeah.
And then I'm going to say.
I mean, I almost said 3.5. I mean, golly.
Torn on this one.
I'm going to say 3.
Ooh.
Well, and see, I was going to say you're hedging your bets there because you're bullish on the equity side, but then so that means if the equity side is not so bullish as you think, then maybe that 10-year number actually might be closer to 3 because maybe we get some rotation into.
Because you said it's 3.1.
No, it's 4.18.
4.18.
Yeah,
I'm sorry.
yeah.
I'm sorry. 4.18.
Yeah, so 3 would mean.
So I'm saying, yeah, I think 3 is a reasonable number.
And we think that the Feds, typically or right now, if you look, the equity markets are thinking that there's going to be at least one more cut from the Fed. So yeah, I buy that.
All right. So we're gonna keep this little sheet of paper here.
It's on the record.
It's on the record, and we will revisit this idea in 52 weeks from now.
Yes, we will.
And see where we ended up and see who's the winner. And whoever wins gets 10,000 points.
Nice.
Which equates to the rest of us buying that person lunch.
There you go. That's great. Whoever that's a great wager. We'll whoever wins gets to buy lunch.
Yeah. Okay. Thank you guys for tuning in. Don't forget, interact with us. We're on Facebook, LinkedIn, and YouTube. We will catch you back next time. Happy New Year, everybody. Securities and investment advisory services offered through LPL, a registered investment advisor, member FINRA SIPC. The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision.